the ECB might not even care whether people use it or not. The purpose of the digital euro is to provide a public option, a public utility for people to use if they want to.
Hi, my name is Leo Vaskelainen. I'm head of banking at Siili Solutions, and welcome to Composable Banking podcast, where we discuss the realities and expectations of the changing banking landscape. Today we have honorable guest Ville Sointu from Nordea. Welcome, Ville.
Thank you very much. Good to be here.
The biggest question right now, I would like to know, what are your hobbies and where do you work right now? Because I check out the LinkedIn and it looks like you have some new responsibilities. So please enlighten us a little bit.
Yes, indeed. So for the past couple of years, I've been joking that I'm a recovering banker because I went out of Nordea for a couple of years. But now I'm back in Nordea. So I guess you could call me a relapsed banker at this point in time. I just started a few weeks ago back at Nordea. My responsibility right now is digital currencies, including the public and private side of that conversation, where I'm looking to support the bank, of course, in their way forward in this kind of constantly evolving landscape. And before we start, I, of course, have to remind everybody listening and watching here is that the views and opinions that I express during this conversation are my own and not to be confused with those of Nordea's official views. So while, of course, I have influence towards what the bank is saying, today I'm just speaking on my own behalf.
Noted.
And on the free time, again, I like cooking. I like electronic music, like we discussed just before we started.
Yes.
And I have my own podcast.
All right.
So that's one thing that I wanted to promote, of course, is that my FinTech Daydreaming podcast has been around for now 3-4 years, I think, at this point in time. I do it together with my good friend Paul Krugdahl, works at Sumlink at the moment. And we do it in our free time and we have a lot of fun. So once you've done listening to this podcast, go and check it out.
Awesome. That's a good promotion for the listeners right there. And if we now jump back to the actual employer right now, the Nordea itself. So how would you position that, what the Nordea is trying to achieve for the next upcoming years? Like, what are the strategy ambitions right now?
Nordea, for many reasons, has been seen as a digital frontrunner for a long time. This goes all the way back to the 90s when Nordea was one of the first banks in the world to launch e-banking capabilities and further on develop that into mobile banking. They were the ones involved in a lot of the firsts in terms of mobile payments, including launching of Apple Pay some years ago. Nordea was the first one in the Nordic countries to launch Apple Pay and all the other let's say, operating system provider pay solutions in the Nordic countries. So for many reasons, you can say that Nordea has been front-running a lot of the digital development in the Nordic countries. Personally, like I said, I was working also for Nordea between 2017 and 2022 for 5 years. My responsibility back then was emerging technologies, DLT and blockchain. And Nordea was also the first Nordic bank to launch a blockchain-based solution all the way to the production. This was a trade finance solution called WeTrade. Later on, we also were part of launching the DIAS network, which is the digital housing market network, still in production today here in Finland. So a lot of firsts for Nordea, and I think that's always been at one of the main principles of Nordea. If you look at the overall strategic goals today under the current leadership, it's always about customer service. So it's basically wanting to simplify a lot, making sure that there's always customer comes first and customer service is always as smooth as possible. As everybody knows, of course, it's not always perfect, especially when you are the largest. You're also the number one target for many times because you do a lot. You also then some things happen on the sides of that. But in terms of goals, what Nordea wants to be, it wants to be the best customer service bank in the Nordics.
Sounds very interesting. As I'm also a personal Nordea customer as well, so I'm being quite satisfied with the services I have received. So definitely looking forward how the future will kind of unfold itself for Nordea, definitely. And taking point from that, as you mentioned, you being positioned as a chief strategist on the digital currencies. So if we now delve into the digital currency itself, and it comes down with the digital euro, something I'm heard in the market. So that's why you're kind of on this podcast right now. I think you're the best specialist and expert in the market that who can tell us and the listeners what is actually digital euro and what is this concept that everybody talks about right now.
Yeah, and you rightly point out that this actually is the reason why I came back to Nordea, because I find this space really fascinating. And not one of the biggest reasons why it's so fascinating is because it's also quite unclear what it is. So there is a chance to actually shape the future of the digital euro, even as we speak right now. So, but let's take a step back and see. So, what is the purpose? Why did the project for the digital euro start in the first place? So, I think it was at this point in time, about 2 years ago, when the European Central Bank established the project around the intent to investigate the feasibility of a digital euro. Now, from the offset, they had a very clear principle, and that's the fact that if you and me today want to have what we call a central bank liability in our own hands as private citizens of the European Union, the only way to do that is to have physical cash. That is the only thing that has a direct connection, and is the direct liability of the central bank. The money that we have in our bank accounts, the money that we use with our cards today, that's so-called private money. So it's commercial bank money, and it's backed by the commercial bank, basically part of this system. Now, at the end of the day, there's central bank always behind a lot of these things because everything is connected from that perspective. But in terms of the liability, it is really the commercial bank liability. The downsides of this, we can see whenever there is some type of banking crisis, and some of these commercial banks get into liquidity problems, so-called bank runs, then your money in that bank, you are not able to go to the central bank and say that I want my money back that I had in this bank, because that is between you and the bank where you had the deposit. So that is the definition between private money, again, the bank money that we have in our bank accounts, and the liability of the central bank. Now, as we know today, most of commercial transactions happen not in physical cash. So everything is online, everything happens electronically. We're moving into a world where cash is becoming increasingly, not usable in the environments where we do commercial activities. So the central bank felt that, the central bank needs to have an option available for citizens to actually be able to use central bank liabilities also in digital and online environments. So a kind of a digital version of cash in its own regard. Now, one thing to also clarify is that even though you heard some years ago, you started to hear these things that, like the Swedish central bank, for example, made some statements around wanting to replace cash altogether. I think this has evolved quite a bit. So the European Central Bank never had the intent to replace cash with a digital euro. They want to complement cash. And again, this speaks to the point about having a digital equivalent of physical cash in the online world, but not to replace the physical cash altogether. Now, then there are other things, of course. One of the bigger reasons, of course, is that practically all of the private sector transactions on the banking sector are controlled again by private entities, but also non-European entities. So they wanted to have a European public option for transaction processing as well. It's part of the so-called European Union payment sovereignty agenda, which is very strong in the European Union right now, where they want to make sure that the European Union is resilient when it comes to different kinds of external shocks, including the ones that might be affecting the banking system. Third one is the digital inclusion and financial inclusion angle. So they want to make sure that there is a public option for the individuals that might be left out by the private sector.
All right. There's a lot of information coming out, so I need to process a little bit. Try to put everything together. So we start with the why and which direction we're going. And if we go a little bit deeper in a sense, if we look from the European Central Bank, why did they initiate this in first hand? Like when it started, kind of thinking about it, like let's start doing the digital currency. And is there any other examples outside of European Union who has done it or start being considering about it? Where did the spark come from?
That's a good question. There are many kind of origin stories, if you kind of borrow from the hero universe a little bit, about who actually came up with the idea of central bank digital currencies. Now, if you look at the landscape all around the world, I think most, if not all, the central banks have at least some level of investigation going on at the moment for central bank digital currencies. The one that can be said is the most advanced right now is the Chinese central bank. So the digital yuan was launched in context of the Olympic Games, so that was made available there. We also have countries like Nigeria who have already launched their version of central bank digital currencies, including, and then some smaller countries, including in the Caribbean islands, for example. But who came up with it first? I think the first bank that ever kind of made the headlines, at least here in the Nordics, was the Swedish central bank. So Riksbank made this whole kind of a very publicly followed project around the fact that cash usage is practically zero in large parts of Sweden already. And they wanted to tackle this issue of not having a central bank option available and making sure that there is a equivalent of cash, almost like an equalizing factor for everybody who wants to have a digital version of cash available. So there's a lot of kind of activity happening in this space. And then of course the question is that, well, why did this start? Again, many reasons, but one of the reasons publicly mentioned as well is the fact that the cryptocurrency space and the private stable coins kind of started to fill in a gap that the central banks felt that, well, maybe they need to step into this discussion as well. And I think the last straw was when Facebook started the Libra project quite publicly. And then they got, of course, a very strong pushback from the regulators to actually to do anything in that space. But that was a bit of a wake-up call as well for the central banks. And that was probably part of the reason why they went to this direction.
All right. And if we look into the currencies itself, like when you go to the LinkedIn or any other social media platforms, start scrolling about what is happening in the market, there's cryptocurrencies, there are stable coins, dog coins, there's many different kind of coins happening right now in the market. So how would you see the central bank digital currencies sits in this kind of a field or landscape of various new blockchain technology-based coins and currencies?
Yeah, I would actually remove the blockchain word altogether from this conversation, because ultimately it is about who issues the value and then how reliable is that party who issues the value. Now, whether the means of transaction for that is a blockchain or a decentralized database or a centralized database, is it part of the existing banking system? That's ultimately irrelevant in this conversation. It really is about who is the issuer, who has the liability for that value. So who can you actually go to when you want to get some value with that, with the thing that you own? Now, in terms of central banks, it's quite clear. I mean, it's quite literally there in the name. It's central bank digital currency. So you know that these very established cornerstones of our financial system are the ones who are guaranteeing the value of that coin or that value or token, however you want to see it. It's either very unclear who actually is the issuer when in terms of like Bitcoin, for example, it's part of this protocol where the value is created. We don't need to repeat those things. You can listen to other podcasts where this will be explained in much more detail. But the issuer is unclear, unclear. It's part of the protocol in a sense. But the main problem with even those kind of decentralized coins is the fact that it's the liability of no one. So you could argue that the value that's behind it is not guaranteed by anybody. There is no legal recourse for any of that value. And therefore, it is not really compatible to the commercial systems of the world, because ultimately the value is defined by whoever is willing to pay something for it. It's not a liability of anyone in that sense. The stablecoin space is a step towards more controlled ways of doing that. So we have stablecoins like USDC by Circle, we have the USDT by Tether, and many others, of course, are available. And these are always issued by centralized entities. So they're private companies in different parts around the world, and they issue these coins. Good to note that most stablecoins, including the one that is most talked about, Tether, actually is not a liability of Tether themselves. That's quite interesting to see. You can actually, if you go and read the terms and conditions of Tethers, it's not a liability of Tether. So they will give you the coin, they will put it on the blockchain, but ultimately, if you go to a court of law, they will point out that we never said that we're going to give you $1 back for that Tether. Anyway, I don't want to get into Tether conversations today, but that's a problem from a kind of a commercial system perspective, because if you want to settle a contract and ultimately want to even spend that money somehow in the future, you need to have a very clear understanding of the liability of the value that you have on your balance sheet. And then comes the more regulated ones, I guess, the ones that mentioned before. So Libra or Facebook wanted to launch Libra, and they wanted to make it more compliant, more in line with the expectations of the market in that sense. But ultimately, still a private company behind that stablecoin. And that got, again, a lot of pushback by the regulators for very good reasons. So that really leaves that the digital currency space as it stands today is a fairly open game. Now, today we're seeing regulated stablecoins coming into the play as well. So we have companies who have achieved and being granted e-money licenses, for example, in Europe. So they are called so-called tokenized deposit schemes, where they have a regulated way of ensuring that there is value behind these coins, and they are again e-money institutions, so they are being supervised through those controls. And that's an interesting space to look at for sure. We have companies all around Europe, including one that I know very well here in Finland, who is moving forward in that space. And then we'll come to the end of this very long description, which is the central bank digital currencies at the end of this spectrum, again, being a central bank liability like we already established. So maybe that explains a little bit about the difference of all these different coins.
If we jump back a little bit to the digital euro right now, so how would you say or describe the current situation? So the project, of course, has to be quite massive, quite big. There's a lot of entities that are involved, a lot of parties, and now everything needs to be kind of brought together and pushed to the same initiative. So what is the current situation? So when we're gonna have actually digital euro on our hands, how would you see the situation?
Yeah, so to be clear, we might not even have a digital euro in the future. That's unclear at this point in time. So there is no guarantee, there's no kind of agreement that it will ever be launched. So the European Central Bank has been very clear about this, at least in my mind, has been very clear about this. And that is the fact that they are now investigating the feasibility of the digital euro. I myself was part of the so-called market advisor group for the ECB, so that gave me access to some of the more detailed parts of how the design process was going over the past 2 years. Now the market advisor group doesn't exist anymore, so now I'm kind of have the same information as everybody has from the ECB website. But the first part of the so-called investigation phase is now over. So they have decided to move into what they call a preparation phase. And this is going to be another 2-year phase in the digital euro program, where they are basically evolving the design. They're supporting the legal or the legislation processes that are necessary for a potential digital euro. So the European Central Bank is working together with the European Parliament, the European Council, the private sector through multiple entities as well, to make sure that the upcoming design and the parameters and the rule books and everything that comes with a new payment scheme in a way is aligned with the expectations of the market. And this is going to take 2 years. Now, at the end of this 2-year period, they will, as part of this 2-year period, they're also looking into selecting certain parts of how this system will be built. So they will be engaging the different vendors on the technology side as well to make sure that they get the right ones to develop the potential launch then. After the 2 years, they will call. They have a very I know central banks have fantastic imagination, but in this case, they call it preparation phase 2. So, and that's gonna start in 2 years' time, and that's actually gonna be the part where they will start the development of the digital euro. So, hoping that they have already settled with the technology providers, the design, the kind of technical parameters of the potential digital euro, and then they will move into this development phase or the preparation phase 2. They publicly stated that while there is no clear timeline on when this will be finished, if it ever will be finished, they're saying that it's going to be at the earliest between 4 to 5 years from today. And we're speaking in 2024 today. So it's going to be 2028, 29. We're going to be looking at the first time we might have our hands on the digital euro. Now, bear in mind that because we're talking about central banks, we're talking about the European Parliament, we're talking about the national parliaments and all of those things. We're talking about making new laws. So that means that is highly political. Then we have to remember the way the European lawmaking or legislation works is that the parliament proposes something and then it goes to national parliaments to vote into national law, and that's going to take its own time as well. So yeah, it's there's a lot of ifs and buts in this process, and then finally in the end, the European Central Bank also has their own decision to make. So once everything is said and done, the ECB can still say, "Thank you very much, we will not do it." So, so yeah, it's a lot of ifs, and again, far from certain that it will ever launch. But one thing is for sure is that it's going to be a fascinating journey to see where we end up and how we get there.
Oh, definitely, that's for sure. It's going to be a very interesting journey, and I'm looking forward to be on the side on this and just see how it will evolve in the future. And of course, when you mention about the timelines, there's many years to come here, and which will involve quite a lot of resources. So who will kind of cover all of this? So who will pay for all of this?
That's a very active conversation, as you can imagine, between the private sector, so the banks who are being mandated to support it in the end if it's ever launched, and of course the central banks and the public authorities. So who's going to pay? Who's going to cover the capital cost? Who's going to cover the operational cost? And then what will be the price for everybody involved ultimately? So, and that's, again, you can look at things like the European Commission published an impact document or impact statement document mid last year, so mid 2023, and it had estimated some costs for this solution. So both from a capital expenditure and then operational expenditure. The major cost elements are related to you need to update the acceptance infrastructure. So if you really want to use the digital euro, you need to have some way of spending it at the stores and the merchants. So you need to update the payment terminals. You need to update all of the ways you're able to spend it, including online and the kind of corner stores all around the world. So there's going to be costs related to that. Then there's going to be a lot of training that needs to be done for people who need to support that. But then the bigger cost, at least from a bank's perspective, is that the regulated payment institutions are going to be so-called intermediaries. So they need to be both distributing and accepting digital euro payments, and they need to support the related account infrastructure. And of course, do the KYC and or know your customer and anti-money laundering and fraud detection and everything. All those responsibilities remain with the intermediaries, and that's a major cost for sure. Now, if you refer back to the European Commission's impact statement, they're saying that it should be somewhere between 1.5 and 2 million euros per payment institution, the cost of building that capability. I personally strongly disagree because, again, knowing how payment institutions, especially the established ones, work, that investment will not get much moving at all. So we will definitely revisit those things. So yeah, a lot of cost involved. So that's the capital cost. And then there's, of course, the operational cost of keeping it up and running. But to your question, so just kind of framing what's the kind of different cost elements we're talking about here. Who's going to pay for it? So the European Central Bank has made it very clear that the usage of the potential digital euro will be free for citizens. So for you and me, we can download the app, or we can include it in our mobile banking applications from the banks that we already use today. And we will be able to use the digital euro with no extra cost involved to us. The merchants who accept digital euro payments will pay, according to current plans, the equivalent amount to existing payment schemes. So it will be similar kinds of costs as typical card payments today. So the simple answer to that question is that the merchant will pay. And then if you kind of dig a little bit one layer below, of course, what the merchant will do, they will transfer that cost to the prices of goods. So ultimately, it's going to be you and me who's going to be paying for those things in terms of the prices in the stores where we are buying things. And then, of course, as part of the being taxpayers in the European Union. So that's the unfortunate truth for, I guess, most of the things that happen in this world.
Yeah, exactly. So in the end, you and me will be the people who are going to pay for this new fun. If you
in
put it
one way or
this
the
way.
other, yes.
Yeah. But is it possible that the digital euro will create kind of or that weakens the position for the banks and their competitiveness? Because there's a new currency coming in, they need to implement it. There's a lot of resources, a lot of funding needs to put into it. There's a lot of work to be done, and somehow it will also open up the market a little bit more. So would that kind of weaken the bank's position in the market, in Nordics and in Europe itself? How would you see that?
There's two parts of concern from banks' perspective when it comes to the position of existing commercial banks. And the number one is the balance sheet treatment of the digital euro. So the capital that the banks have in the central banks now, if that amount of capital at the central banks will go down, because again, it's a direct liability between the individual and the central bank. So again, it will not go to the balance sheet of the commercial bank like it does today. So that means that there's going to be potentially less capital available for commercial banks, which will then affect their capability to do lending. So again, with the existing regulation, you need to have a certain amount of base capital in order for you to do lending. And of course, if your capital goes down, then your lending capability will go down as well. So that's a legitimate concern. But that would actually imply that that a lot of people would move a lot of commercial bank money into the digital euro. And what in the discussion in the current design of the digital euro is taking care of this, that they're basically going to have very strict limits on how much you can actually hold the digital euro on your balance. So while the actual number hasn't been decided yet, it's not going to be tens of thousands, it's going to be thousands of euros at maximum, that amount that you're able to hold at any given time of the digital euro. So if you look at that, then you're only able to have a very smallish amount of the digital euro. That means that even if everybody has the maximum balance, then that's not going to create a financial disaster for the banking sector. That's the theory, at least at this point in time. So that's also one thing that the digital euro does not aim to be. It does not want to be a store of value. It really wants to be the kind of this very transactional kind of way of doing things and interacting with the central bank values. So forget about storing your money under your digital mattress for any kind of significant scale. So that's one thing. So again, it is the capital and the balance sheet treatment of the digital euro, which might have concerns for banks in terms of how much they're able to do lending in the future. So that's a serious concern, but I think it's the ECB is doing its best to address that for sure. The second part is related to the fact that, well, if a lot of the, let's say, day-to-day payments, both person-to-person payments and the consumer-to-business payments, so when we pay at the stores, if a lot of that volume is going to go to the digital euro, then doesn't that mean that the things like card transaction revenues, interchange fees, all of those things will disappear? And, well, definitely impact the transaction banking revenues, at least for banks. Yes, however, what you have to also remind everybody is that the ECB, in its current intent at least, intends to have equivalent or very kind of same level of compensation for the payment service providers for the digital euro as they get from current card payment schemes. So again, technically speaking, from an operational income perspective, you should see the same amount of value coming in or transaction revenue coming in for the digital euro as you have for our existing ones. So in a way, the concern that suddenly large parts of your payment income will disappear should not be true if things go out as planned. Also good to point out at this point in time that the ECB has excluded business-to-business payments. So corporate payments are, of course, a massive business for many banks, and due to this, they have in the current design excluded corporate payments altogether from the digital euro.
I was also reading a lot of blogs and news and white papers around the CBDCs, but also the digital euro, and there's always comes up this privacy concern. So from the consumer's perspective, kind of the privacy, the surveillance, personal information, the data, everybody's now already worried about all the AML practices and know your customer, etc. You need to fill a lot of information about yourself, your kind of a transaction behavior, etc. Are you kind of a concern, or how you could kind of explain the situation? Will that kind of increase the surveillance or will not? Or how would you ease the consumers here?
So there's two parts to this conversation. There is the first part, which is the kind of, okay, do we trust the central bank when they say something? So again, if you don't trust the central bank, it doesn't matter what they say in terms of technical design and how it works. So again, we can almost discount that part of the conversation. So there's always going to be a lot of people who say that, the central banks, they say one thing, but they do another thing, and there's nothing I can say about, well, there's nothing I can add to that conversation, let's put it that way. But if we actually refer to the facts on the table, so the technical design as it's seen today, the principles and the requirements that the ECB is putting in place for the digital euro, they actually are very serious about addressing the privacy concerns. If you look at the surveys that the ECB, because that's actually one thing to also note, is that the ECB has been very good at actually asking people a lot of opinions about the upcoming digital euro. And on the top of those lists, especially for individual citizens, it's always been the privacy. So they want to, especially when it comes to talking about complementing cash, one of the reasons people use cash is privacy. So they want to make sure that any digital version of that cash also has the same kind of privacy enablement in place. And talking about privacy, another thing to note is that privacy is not the same as anonymity. So again, full anonymity will never happen in any kind of online regulated payment system, including CBDCs. So anonymous, never going to happen. There's always going to be the payer and the payee need to be known by the system. That's why we have know your customer processes, and that's why the CBDC designs will also include only KYC customers in these systems. So again, that does not mean that it's not private. It's not anonymous, but it's definitely private. And the reason why we can say it's private is that the same rules for crime prevention, fraud prevention, so anti-money laundering and counter-terrorist financing capabilities, those will also apply for CBDCs, or the digital euro at least, in the future. So that's going to be the same as the existing system. What's different and why it's more private than the existing system is that the central bank who will handle the settlement of these transactions, so they have the ultimate ledger of how many digital euros are out there and what is the overall balance. They will not see who actually holds those balances. So they will have an understanding of the total amount, and they will know that there are these buckets of digital euros out there. And it's quite elaborate design. I actually recommend you go and read it on ECB's website. But they don't know, the individuals who actually hold those balances. So from a central bank's perspective, they do not need to know, do not want to know who holds those digital euros. Now, it is the responsibility of the payment institutions and intermediaries to know those things, but they don't need to share, though they will not share that information with the central bank. And it's the same system in a way as it is with cash today. So if you go to an ATM and you withdraw the cash, then that interaction is it's coming from your account, but it's been converted into cash. But what happens then, the central bank doesn't know. Not even the commercial bank doesn't know. So the ECB is saying that this is the same as having like a digital version of that ATM or cash machine. So when you get the digital euro, from a central bank's perspective, it's out there. They know it's out there, but they don't monitor it in any shape or form. So it is not as anonymous and private as physical cash, but it's definitely more private than the existing banking system.
It's a good answer.
Thank
Well
you.
done, Ville. And kind of start slowly kind of wrapping up this podcast episode. We have already coins, we have cash, we got Apple Pay, Samsung Pay, Google Pays, then we have NFCs, we got cards, American Expresses, a lot of different kind of payment methods that we have out there. So why do we need digital euro? Why we need one more?
This is the number one question that we always get when we talk about the digital euro, and it's a very good one. And it's the exact same question that I had, the first question that I had when I went into this space as well. Why do we need it? Because again, first of all, when you have digital euros and you have the money on your bank account, 1 euro will be always 1 euro. That is the purpose of the central bank. They want to maintain monetary stability, the financial stability of the system. That is their number one goal. And obviously, a big part of that is maintaining the one-to-one relationship of any type of cash, commercial bank balance, or a potential digital euro. So that will never go away. So if it's not accruing value, and actually they've also excluded things like interest payments on the digital euro, so there's not going to be any interest paid on that either, then why do I need it? It's just another way of paying at the point of sale, whether that is online or at the corner store. And the answer is actually, in my mind, quite interesting, because ultimately, and this is my personal opinion, this is not from the central bank, is that the ECB might not even care whether people use it or not. The purpose of the digital euro is to provide a public option, a public utility for people to use if they want to. So people can continue and should continue to rely on private systems for payments. So your typical card payments by the usual big two schemes, you can continue to use that. But if something happens, if the big players start misbehaving, then there's going to be a public option for you to always fall back to. So you are able to use your euros still free for you on a daily basis. Anywhere you want, because it's legal tender. And you're not reliant on the big two card schemes or any other entity for that matter. So it's a direct relationship between you and the central bank. So that kind of almost like a hedge to the existing system from a public and policy perspective, that kind of makes sense in my mind. Because even if it doesn't get a lot of usage, even if the American solutions continue to behave in a good way, as they probably will, knock on wood, and then we're not going to see a lot of usage for the digital euro, but it's still there. And maybe that's part of the reason why they continue to behave well, because there's always going to be this kind of public hedge in a way. Now, is it worth the price tag? I'm not going to answer that question, but again, at least that's one potentially fairly good reason why this could be a good thing to happen. Also, other than that, of course, we're going to see a lot of harmonization and standardization happening. So we we both know the complexities of combining instant payments across Europe, for example. With the digital euro, you would have almost like this, killing a mosquito with a hammer type of situation. But again, you would have complete interoperability across the whole Eurozone for P2P payments and things like this. So you're able to take your digital euro balance from Finland and spend it in Greece with absolutely no problems. And you're able to send that digital euro to any individual in Greece as well when you're there, or even when you're still in Finland. And again, it will work. And that in itself, this kind of harmonization and standardization is not necessarily a bad thing, of course.
Yeah. And it would bring the European Union even closer to close to each other. So
yes,
it's a very good ambition. It could work kind of a spare parachute. If the main parachute doesn't work, you have the spare one there.
Yes,
just in case.
Yeah, exactly. A very expensive one, but
expensive.
Still.
It works. But kind of wrapping up this episode, and if there's a listeners who wants to kind of hear more, learn more, and kind of get more insights and follow the latest kind of announcements, if we put it this way, where should they look for new info, like the latest information? Especially we might have a lot of bankers who listen our podcast, or regular consumers, where you can find more information.
Yes. So when it comes to the digital euro, of course, the number one location is the European Central Bank's website. So they actually do a very good job in publicizing everything that is happening around the digital euro as soon as they can. So you will be able to find the whole history of all the presentations that they have ever given to any public forum. Everything is there. They also include references to the European Parliament's legislative processes and the Commission statement papers and other kind of inputs to the digital euro process. So again, follow that website for the most, let's say, at least accurate information. Now, then, of course, European Parliament, Commission, and all the other entities have their own on pages as well. The national central bank, so for example, here in Finland, Bank of Finland has their own sources as well, as you would expect. And then from the private sector or the banking side, you can follow the different bank associations of the countries where you are. So they will always have the position papers. Finally, the European Banking Federation (EBF) has also put out statement papers and positions on the digital euro and how it's going to be moving forward. Then, of course, from my perspective, Nordea.com, if you want to know what's happening at Nordea, and then fintechdaydreaming.com for my podcast. So there we go.
It's a good combination, but you forgot the most important one, your LinkedIn profile.
Oh, yeah.
Of course, you're going to naturally post something in there as well, right?
Of course. Yeah, that's true. So I used to be active on Twitter or X, not anymore. I still have an account, but I don't use it anymore that much. So LinkedIn. So you can find me on LinkedIn. I post there quite regularly. Part of those posts are about the CBDC as well.
Awesome. All right, Ville, one more question before we wrap this up. If I gave you 100 million euros, and you have only one assignment, you need to build a bank or a financial institution.
Mm-hmm.
What kind of a bank would you build?
So the first thing I would do is I would get another 100 million euros because 100 million, according to experience and market data, is not enough to build a successful bank. So you can look at Monzo, you can look at Revolut, you can look at even Trade Republic from Germany. You do need much more capital to build a successful bank. But that thing aside, let's say it's a 1 billion. Let's say we have enough money to build a bank. So what kind of bank would I build? First of all, a couple of principles. It needs to be built around the exact right team with the right principles from the ground up to be data-driven. And again, of course, the usual things like, quick time to market, quick development, great understanding of what the customers want and so forth. So those are the kind of hygiene factors that you absolutely have to have in place. And the number one thing that is missing from most legacy institutions today is the data-driven fact. So again, starting from day one, from every atomic thing that you do, there needs to be a good way to actually access that data, get understanding of what's going on the ground so that you can make data-driven decisions on whatever business you're going to be driving. Now, then the question becomes, okay, so what does the bank do and to whom? And my answer currently is that I would address the number one underserved segment in Europe and even globally, I would argue, which is the small and medium-sized enterprises. So small company businesses, especially for cross-border trade. So my focus would be to build trust bridges, digital trust, low cost of transaction for cross-border trade, cross-border payments, and then using these data capabilities for smart and lower risk credit decisions on day-to-day basis, on almost like atomic level, focusing on the cash flow of the SMEs, making sure that they're able to make quick decisions and have access to, growing their businesses in a smart way, and then managing the risk around that with data. So that would be my bank.
Well, that's a quite good combination. I'm quite confident that will fit quite well, despite the Finnish market or any other market in Europe. So that's a quite good secret sauce for the for the 100 million, or actually you said 1 billion.
Yes.
So let's spend it wisely. 1 billion.
Indeed.
All right. Thank you very much, Ville.
Yeah, thank you.